It's Thursday, September 25th, 2025. Welcome to your daily news update on Blip Brief. Small, but almost everything updated every weekday. All right, let's dive straight in. The Indian markets. Well, they're still feeling the pressure. Fourth day of losses now.
That's right. Yesterday, the BSE Sensex finished down around 0.5%.
And the Nifty 50 wasn't far behind, closing lower by about 0.4%. So this isn't just a blip, is it? What's really driving this sustained caution?
It feels like a combination punch, really. You've got the external factors, definitely some spillover nervousness from the U.S.
The Fed chair's comments on valuations.
Exactly. Flagging high valuations puts a bit of a damper on risk appetite everywhere. But then there's the domestic layer, too.
The geopolitical uncertainty, stuff like potential U.S. actions, tariffs, the H-1B visa situation, that's making investors jittery.
I think so. That kind of uncertainty, especially around trade and talent flow, it keeps people on edge, and you see it reflected in specific sectors.
Yeah, I noticed auto and IT stocks really took a hit. Significant selling pressure there.
Makes sense, right. They're quite exposed to global conditions.
Yeah.
Tata Motors, for example, dropped roughly 2.7%.
And Marupro was down around 2.0% as well, so clear pressure points there.
Definitely. But interestingly, not everything was down.
Right. The FMCG space seemed to offer some defense. The Nifty FMCG index actually closed slightly up, 0.2%.
Yeah, a small gain, but significant in context. It shows that classic flight to perceived safety within the domestic market, people moving towards things less affected by global trade winds.
Hindustan Unilever and Nestle India both saw gains, around 1.0% to 1.5% each, I believe.
That's right. Solid performance, all things considered. A bit of a defensive shield, as you said.
Okay, let's shift gears to the money markets. Because the rupee, well, it's under serious pressure, hit its lowest ever closing level against the dollar.
Yes, lowest ever close, and weakening for the third straight day.
So why the struggle? Is it purely domestic factors, or is this more about the dollar itself?
It's largely a U.S. dollar story, actually. The dollar's just staying strong. Traders are constantly rethinking when the Fed might actually start easing rates.
And every time that gets pushed back,
the dollar looks more attractive. Plus, everyone's waiting on key U.S. inflation data. That could really cement expectations about the Fed's next move. So capital flows are favoring the dollar right now.
Got it. Okay, what about commodities? Oil prices jumped over 1%. What spurred that?
That was driven by supply concerns, primarily a surprise drop in U.S. crude inventory.
Lower stockpiles than expected.
Exactly. Suggests demand might be stronger than anticipated or supply tighter. And you combine that with the ongoing export issues, Kurdistan, Venezuela, Russia.
Right. Those geopolitical factors are still simmering.
They are. So it creates this feeling of tightening supply globally, pushing prices up.
Let's turn back to India's economy. Some interesting policy developments. GST 2.0 seems to have kicked off strongly. Digital transactions surged.
Massively. Tenfold increase on day one after those GST cuts on consumer items. That's huge uptake. Shows the digital payment infrastructure is really working.
And the launch of the GST Appellate Tribunal, the GSTAT. That sounds quite technical, but is the aim to cut down on tax disputes?
Precisely. The goal is to dramatically reduce litigation, which is a big deal for businesses. Think about all the working capital tied up in disputes.
Money stuck in legal limbo instead of being used for growth.
Exactly. So GSTAT aims to unlock that. It's a potentially significant boost for ease of doing business.
But it's not all smooth sailing domestically. There's a risk emerging on the agricultural front. Excess rains threatening kharif crops.
Yes, that's a worry. If kharif output suffers, it directly impacts food supply.
And food inflation is always a major concern.
Always. It can quickly affect broader economic stability and potentially tie the central bank's hands when it comes to easing policy, even if other indicators look good. Definitely something to watch.
Okay, broadening out again to global trade. China made a significant announcement regarding the WTO, didn't they? Saying they'll stop seeking developing country status.
They did. It addresses a long-standing complaint from the U.S., mainly. It's a symbolic move, removes a point of contention.
But does it actually change their trade practices overnight, like subsidies or market access?
Well, that's the million-dollar question, isn't it? Probably not immediately. It's more like lowering the temperature diplomatically than a fundamental shift in economic behavior, at least for now.
And connecting back to the U.S.-India friction, the H-1B visa tightening, we're hearing about Indian tech workers actually deferring travel plans.
Yes, it's causing real disruption. And it's pushing skilled talent to look elsewhere.
Other countries are stepping in.
Absolutely. You see places like Germany, Canada, the UK actively trying to attract that talent. They see the U.S. tightening as an opportunity. They're rolling out the red carpet, so to speak.
Simplifying visas, offering residency paths.
Right. It's a clear example of how immigration policy directly impacts the global race for skilled workers. Talent flows where it's welcomed and the path is clear.
Fascinating dynamic. Okay, despite market volatility, the IPO pipeline in India seems incredibly robust.
Yeah.
PhonePe filed its draft prospectus.
Yes, Walmart-backed PhonePe. A confidential filing, but reports suggest a valuation around $1.5 billion. That's a big one.
And it's not just fintech, right? Pharma and healthcare are gearing up, too.
Definitely. That sector is looking to raise somewhere between 12 and 13,000 crore rupees through IPOs in the coming months.
Wow, so there's still significant investor appetite for India's growth stories, particularly in certain sectors.
Seems so. The primary market looks quite confident, ready to fund expansion, especially in healthcare and digital platforms.
We're also seeing big corporate moves. JSW Group raising funds for an acquisition.
Yes, looking to raise about 7,000 crore via NCD's non-convertible debentures.
Right, and using NCDs means they raise debt rather than diluting ownership by issuing new shares.
Exactly. It's a way to get significant capital for a big purchase like AkzoNobel India without altering their existing equity structure too much. Smart financing.
And Indian companies are looking outwards, too. Polymedicure acquiring an Italian firm?
That's right. Polymedicure buying City F Group in Italy gives them specialized products and a European base. An enterprise value around, what was it, about 324 crore rupees equivalent?
And closer to home, a major defense partnership.
Mm-hmm.
L&T and BEL teaming up.
Yes, forming a strategic alliance to jointly bid for the next-gen fighter jet contract for the Indian Air Force, combining private manufacturing strength with public sector defense expertise. Crucial for self-reliance goals.
Okay, let's transition to our final segment, the Tech Deep Dive. Today, we're tackling a fundamental challenge for the AI revolution: cooling. These AI data centers consume enormous power, and a lot of that is just dealing with heat from the processors.
It's a massive bottleneck. The heat density on these chips is incredible. Traditional air cooling is hitting its limits.
So what are the cutting-edge solutions? I know Microsoft's working on something called microfluidics, tiny channels inside the chip.
Precisely. It's about bringing the coolant into direct, intimate contact with the heat source. They etch these microscopic channels directly into the silicon or the chip packaging.
Like plumbing, but on a minuscule scale.
Kind of, yeah. A specialized fluid circulates through these channels, pulling heat away far more efficiently than just blowing air over a heat sink. It attacks the problem right where the heat is generated.
Sounds incredibly complex to manufacture, but potentially much more effective. What's the other main approach? I heard something about using AI itself.
Right. AI, designing AI chips. Companies like TSMC are leading here. Modern chips use these complex 3D structures, chiplets stacked together, designing the optimal layout for power, data, and heat management across all these tiny components is, well, it's unbelievably complex.
It's too complex for human designers to fully optimize.
Pretty much. The number of possible configurations is astronomical. So they're using AI software to explore vast design spaces, specifically looking for layouts that maximize energy efficiency.
So the AI finds ways to arrange the chiplets and connections to minimize heat and power loss.
Exactly. The goal is ambitious, aiming for maybe a tenfold improvement in energy efficiency just through smarter design, guided by AI. It's AI helping to build better, more efficient AI, a powerful feedback loop.
Using intelligence to design more efficient intelligence. That's definitely a powerful thought to end on. Whether it's tracking global capital or optimizing chip cooling, there's always more to learn. Hopefully this gives you some insights to apply today.
And just before you go, a quick note, this deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.